It's June. We have a market update for you. I'm David Shapiro with my colleague Lee Abraham from the Shapiro Group here in Austin, Texas. So let's dive into the numbers and go over what happened in May. So the number of active listings starting this month is 2471. So we're seeing an increase in inventory. If you've been tracking our barometer, which we send out every week, you would have known that weekly we've seen consistently that listings are coming on the market faster than homes are selling.
Well, I think one of the things that's interesting about the number to begin this particular June, when you look back last year, just over 1,000, just under 1,100, so more than double the number of listings. But you know what, David? It's not a problem. It's actually a good thing for the buyers in the market, and it's still not an oversupply when we start taking a look at the monthly housing inventory. So David, when we take a look at the monthly housing inventory, we've got just under 2,500 homes for sale. These are single family homes in the city of Austin. And right now, based on the last 30 days, we're selling over 900 sales a month, 900 homes a month. Gives us less than a 3-month inventory. We look back over the past 12 months, 3 months, wasn't quite as robust. Same number of listings, but the housing inventory jumps up to over 3 months because the pace of the sales were slower.
Yeah, if we go back 12 months, that's right when the market shifted. And so that's why the number was higher, and now it's actually improving,
right?
Meaning that there's more sales happening compared to how many listings are available.
Yeah.
And it's all hyper-local, so each neighborhood is different when it comes to inventory, whether it's really a true seller's market like it is citywide, or maybe it's inching more towards a balanced or buyer's market.
Yeah. And for those folks that have been diligently watching our videos, we've pointed out that the pending sales numbers typically shrink a little bit because sales fall out of escrow. And so what this is going to indicate next month when we look back is a lower number of sales per month, which is actually going to inflate the monthly housing inventory, relatively speaking. Okay. So we can see going into next month, likely the monthly housing inventory should jump up just a little bit.
Okay. And so here you can see it over time and where it's been tracking. So it seems like it's stabilizing there since January, where it's in this, 3 went up to 4 in February months of inventory.
Yeah, it's really fascinating how the pace of new listings coming to the market and pending sales have been mirroring each other. I mean, the market moves by its own devices. There's no, pre-orchestrated plan that these things are going to happen. That's why we track it every month. But it's really been quite interesting here in Austin, where the pace of new listings, the pace of pending sales have been very much on the same track.
Number of sales per month, so down year over year 17%. So that's an improvement because last month it was down. Let's see, by the time the month ended, 250, so it was down maybe 25 to 30%.
Right, yes.
So this is an improvement in terms of the number of sales. That's good to see, and it's up from last month. And then I believe the next stat is the price, where it peaked last year. Yes. And I have not seen this number yet. And I've been telling people it's going to be real interesting to see what happens this May when we see compared to the comp of the all-time high last May. So here it is. We're going to reveal it to me for the first time.
Let's take a look.
And it's down 7%. That's not bad at all. Wow, we're up 3.5% from last month. So, yeah, it's only marginally more than the 6.6% that it was down between April and of 2022 and 2023.
So we're not here to call people out, typically, David. We're here to just present the facts. But for all of the folks, there's probably 3, 5, maybe folks who commented on our videos that a year from now, it's going to be blood in the streets. It's going to be 30, 40% decrease on these values. Just hasn't happened. Just hasn't happened. So the guy who wrote us that he would give us, what was it, $10,000?
Was it a year?
We're looking for you. We're looking for you.
I think let's talk a little about why this is. So, because everybody expected interest rates are going to go up. They went up so much that people's buying power went down significantly, and prices are going to have to adjust accordingly. But that just hasn't been the reality. Prices have gone down 7.1%, but not enough to account for the increase in interest rates. So somebody going and buying an $847,000 home today is still paying more monthly than somebody who bought a $912,000 home a year ago, and got, let's just assume they got the best interest rate possible, or in the 3 to 4% range. So why is it that it didn't change dollar for dollar? Well, we have really low inventory. So there's still more buyers than there are sellers, even though the number of buyers are down. It's like an interesting thing. I guess, I don't know if you maybe could explain it better, but when you're in the market and you're seeing it, a buyer's going like, there's not that many options. Like, yeah, there's stuff sitting, but like that stuff's not so great. That stuff maybe in a market where there's more inventory, it's just sitting longer anyways, and the good stuff is rotating through more often.
Right.
So there's a lot of factors at play here as to why it's happening this way. But Austin's just a really strong economy. There's more people moving here than there are homes.
Yeah.
And that's the bottom line.
When you take a look at the numbers, $912,000 is the average price May last year. That's the peak. That's where all relative comparisons will be made from. And we're just looking at stability, David. We just keep coming back to that word, and it's based on the fundamentals, and we're seeing proof of it here. It's going to be fascinating for those of you that are on our weekly barometer report, where we give a weekly update. We also update our forecast weekly. And when we look at the fourth quarter, particularly in December, 743,000, we're going to have a year-over-year increase in December.
Yeah, that's a pretty low comp.
Yeah, it's just interesting.
And what's the reason? Like, there is just fear. Interest rates, I mean, we could look at the interest rate chart and see, because they have gone up and come down a little bit. So there's been some variation there. But I think they're hovering in like the 7% range. They're in like, do we just have a buyer get in the 5s through a builder?
Yeah, some buy down options.
So there are options to get lower interest rates.
Right.
So you're not stuck in at 7% or high 6s. There are other options. That's where, if you have a question on that, reach out to us. We'll help you strategize based on your goals. Go down into the description. There's a link to schedule a call with us, or just shoot us an email, a text, give us a call. We'd be happy to schedule a time to strategize with you about your goals. It's just a very interesting thing to see Austin holding up the way that we would have expected. Another interesting thing, though, this is actually down more than it was in the 2008 GFC, Great Financial Crisis, where single-family homes only dropped 4%. So we actually have a bigger decline, but I think the dynamics of what's happening in this market, I think people are still afraid, and that's why the market hasn't taken off again yet. The debt ceiling is still looming. They've come to an agreement, but it's not penned yet, so there's still a potential it could fall apart, but it seems like a high likelihood. But I think once that deal is done, hopefully some other things settle down in the macroeconomic environment and people start to feel more comfortable. It's only so long before this market takes off again because there's so little inventory.
Yeah, I mean, when we take a look at macros and the unemployment rate, for example, that just came out, shocked the economists and pundits that were saying it's going to be down, but actually it's much, much stronger. The fundamentals really are driving our economy here locally, and once again, stability is the buzzword for the Austin real estate market.
Yeah, and if we pull up the slide actually from an economic forum we attended recently, you'll see here on this slide the recovery of jobs, and Austin is the leader nationwide.
Right.
Dallas is doing pretty good, but Austin by far on a percentage basis has done the best in terms of recovering jobs. So it's really tough when you're in Austin and you hear all the macro stuff, which is talking about the entire country, to realize we are in an economic bubble here. This is one of the strongest local economies in the country, and so we're just going to perform better in some of these areas than the rest of the country.
As a shameless plug, if you're interested in breaking down some of the sources where the jobs are coming from in our economy, we'll be posting our commercial real estate market report, where we really dig into the different sectors of where the jobs are coming from as well. So days to sell, David, compare anything to 12 days on the market, it's going to be way up. So 233.3% year-over-year increase. That's a dramatic number taken on its own, but when we take a look at the greater scheme of things, down from last month, about 11%. And historically, 40's towards the upper end of the range, but not exceeding the upper end, and it's a healthy number. It's more of a balanced market type of a number.
Yeah, 12 was a little too low.
A little too low.
Number of new listings down 7.6%. I'm not afraid of more listings. If this were to have gone up by 8%, that would have been fine. So down, it's only hurting the amount of inventory that we have, which is already low. And at the end, maybe I'll talk a little bit more about kind of like a whole picture. I'll give a summary of my thoughts. And we're up 6% from last month. So historically, we're going into the selling season. It's common for the number of listings to go up because real estate's seasonal.
Yeah, so far so good on the pace of the new listings coming to the market.
Expired listings, again, we continue to track it, but nothing to see here. Our sale price to list price ratio, and it's down from last year, which we would expect from the all-time high. Interestingly, there's a little bit more than the price was down. I don't know if there's any correlation there.
I don't think so. I think it's too marginal of a difference.
And we're down a little bit month to month, which we were actually trending up from month to month over the beginning part of the year.
Right.
So now it's basically leveled off.
Yeah, it's pulled back just a tiny bit, but 98% sale price list price ratio, very strong indication of market sentiment, and again, a healthy indicator. So we take a look at the listing inventory barometer, and here we're just taking the number of new listings per week divided by the number of pending sales. Is the market absorbing what's hitting the market? Are there more homes at the end of the week than there were at the beginning of the week? When we take a look at the chart, the 100% line is that break-even point on market absorption. And for the past 16 weeks, David, the actual inventory has been going up on the average of about 75 homes a week. 75 more homes at the end of the week than the beginning of the week. Now, if we're selling 900 homes a month, it would take us 3.5 months to add another month in the monthly housing inventory. So that's a very gradual pace of a growing inventory, and that's exactly what we're looking at here. 281 new listings in the previous week, 220 sales. That gave us a net increase of 61 homes. More homes for sale at the end of the week than the beginning of the week, and that's what we're looking at here.
So that wraps up within the city limits. So
Right.
let's talk about the outside the city limits. So most of the time when you see these stats, you're just going to see the whole metro area, but we've actually divided it so that we're not blurring the metro area
Right.
with what's happening in the city.
Right.
So this is a more granular look at the suburbs, which is a much bigger area. So here you can see the 30-day housing inventory is in the 3 to 3.3 months range. So a little bit higher than the city. And the number of sales last month down 9%. So it's not down as much in terms of volume of transactions, up from the previous month of 16%. Right. But let's see what's happening with the, and again, I have not seen this number, but I am curious from the peak, what happened with the average sales price? As I would have predicted, actually the peak for the outside the city limits is next month, technically by 300 and something dollars.
A couple $100.
But down 13%. So thesis that the city holds up, people know Austin, the best neighborhoods hold up better. That thesis holds true. So that's good to see because I've been preaching that for a long time, buying the best neighborhoods.
So days on market, once again, a stark contrast as compared to last year. 15 days on the market in 2022, this year 64. That's quite a bit higher than in town, David. And still, we talked about this last month as kind of a little bit of a red flag that we're keeping a careful eye on as we look at all the metrics. This could be concerning if it ticks up as we get into the summer. We'll keep an eye on it and let folks know what we're finding.
Number of new listings down 12%, so similar trend to within the city, that not as many listings in a time where there's generally more listings. So interesting because the dynamic that things are sitting longer, but we have less listings. Yep. So it's interesting.
Yeah, the real problem would be if that was 4,600 new listings, and then you'd start to see a gap, you'd start to see a glut. We'd be giving a different report at that point, but these are generally healthy numbers as we have stability outside the city limits as well.
Now, here we got something new. Expired listings up 22% outside the city limits. Mm-hmm. So longer days on market, 50% greater basically than within the city, in the 40s to in the 60s days it's taking for stuff to sell.
Right.
And so things are expiring because they're not selling. Yeah. And do we have something to worry about here?
I think it's a consistent area of concern. I wouldn't go so far as to say we're worried about it, but we're tracking it. We've talked about it before. When you have 3 metrics that are indicating things moving in the wrong direction, then it's time to use the W word. Right now we're using the C word, we're a little bit concerned. So, if the price really drops, if the number of listings goes way up, the days on market go way up, then we're going to start singing a different tune. Right now we're keeping an eye on it. Things are still in the healthy zone. So the ultimate measure of market sentiment is the sell price list price ratio, and this is bearing out what I was saying on the previous slide. We've got stability, just under 98%, actually eked out a slight month-over-month increase for the past 5 months, if I'm not mistaken. So we're ticking upwards, which kind of offsets partially the indications from some of those other metrics that are cause for concern.
Yeah, and if you look back, I think this is why the important reason we show several years back, 98% is pretty standard if you go back to 2018, 19. So we're not in any sort of like a weird territory here with the sale price to list price ratio.
Agreed.
So how is the market is a question we get all the time.
Every day.
Well, transactions are down 10%, which means that 90% of buyers are still buying, and inventory is really low. We have under 3 months of inventory. If you were to look back at the number of homes on the market right now compared to 2016, which was a really strong year for Austin. So in 2016, the market appreciated 5.5%. There were twice as many homes on the market as there are today. So why, with everything else going on, would people be afraid to go out and buy? I mean, what I'm seeing is that the market is going to take off in no time. And it's hard to tell if it's going to be in a couple months or if it's going to be next spring. But with inventory so low, and one of the reasons that is because a majority of people that have mortgages have locked in historically low sub 4% mortgage rates. So when they look at buying, and we're not projecting that we're going to see mortgage rates hit that number again. So they go to look to buy, they're like, well, I would actually, because of that, maybe my property tax, I have a homestead exemption, my monthly payment is going to go up significantly if I try to move, even if they try to downsize a little bit. So they're like, well, I guess I'm just staying put. Plus, we've had people that do really need to move because of family circumstances. Maybe they just had a kid, they need more space, they got married, they need to get out of their one bedroom. And what they're saying is, great, let's go buy this. We're cool with 6.5% interest rate. We can make it work for our family. And that other place we own, we're just going to keep it because we have a 3% mortgage, and we're going to turn it into a rental and make that an income property. And so housing inventory has been pulled to the sidelines, and we're not going to see that come back online for a while. So there's no reason to expect that the low inventory that we have is going to change anytime soon. Builders, you know how hard it is to build in Austin? Plus material costs are still high. It's not cheap to build right now. It's very hard to find labor, and builders have stopped buying lots. So the inventory that we would be projecting of like infill lots in Austin, once the market does take off, they're not going to be coming because a lot of builders have really slowed down. And another reason that builders are having an issue is the debt. They cannot get good financing and make the numbers work when they're having to pay 8 or 10%, which is what a construction loan is going for right now. So there's a couple factors that are all influencing what's going to happen. So for me, sitting here as somebody that's following the market routinely, I can just see that in some point, whether it's 6 months or years from now, the market's going to take off. And the people right now that are afraid and thinking like, I want to buy a home, but like, what's going to happen with the economy? They're going to miss their opportunity if they don't push through that and say, this is the best time to buy. And the number of people that have told me that I'm going to wait till the market crashes, it's going to get worse. I had people coming and telling me that in 2015, 2016, 2017. Finally, some of those people in 2018 be like, all right, I was wrong. I'm going to buy. And they would finally get in the market. And they still did phenomenally well between 2018 and the peak in 2022. And if you look at the prices of where they've fallen back to, they haven't fallen that far back. 7.1% is really not that much of a fall. So it is incredibly hard to time the market. If you say, I'm going to wait to see what happens in the economy, you are trying to time the market. The time to buy is when it's right for your lifestyle. So you're ready to move to a bigger place, to a different location, whatever it is, you have a new job and you want to move closer to it, that's the time to buy, and don't worry about the timing because that is incredibly hard to nail. If you nailed it and you bought and you sold your home in May of last year and you bought it back this year for 7.1% lower, you barely made up the cost of selling. The cost of selling is generally 7%.
Right.
So it's so hard to pull that off, the timing with transaction costs in real estate. So my best advice to you if you're thinking about buying is just buy when the timing is right for you and don't worry about what's going on in the economy. Sellers, okay, what should they do? It's pretty much the same story, I'd say, Lee. What would you say for sellers?
For sellers, I would say be sure that you need to sell. If you can turn that asset into an income-producing property, that may be your best bet. But if you do have a life cycle event, need to purchase that bigger home because of the family, to relocate because of the job. Don't worry about the macros. I've been doing this since 1982, David, as you know. When I started, interest rates were 18%. I've survived the great recession and all the other ups and downs that we've had. It's a mistake to time the market, to try to time the market. It's not a mistake to live your life to its fullest, and that's my guidance.
Yeah, and so there is an opportunity because we are so bullish on what's going to happen here in Austin over the next couple of years that if you're a seller and you don't need to sell right now,
That's
you wait a little bit.
Correct.
Right? Like if you don't have something to do with the money that's better than, I don't know what the percentage is, but if you don't have something where it's designated that you're excited about that investment, then just let it ride because things are definitely going to improve in Austin. I think it's the same story. People think they missed out on Austin because, I missed out. Well, what's happened in the last decade, it's going to happen again in the next decade. The story of Austin is, in a middle point. I don't know if it's halfway, probably not quite halfway in the life cycle of a city. So you still got plenty of time to see Austin continue to grow and prices to appreciate because unfortunately, they just can't build enough homes, which is unfortunate for people trying to buy into the city. But for those of you that already own, it's fortunate because you're going to see price appreciation. So, and as Lee has predicted, that we're going to see price appreciation this year.
I believe so. That's what the numbers are telling me.
Year over year, December to December. Lee's calling a shot. So we'll see.
It's very exciting.
Thank you for joining us on today's market update. If you have any questions, go ahead and comment below. We'll get to those. If you want to chat with us about your needs, we'd love to hop on a call with you. So just go ahead in the description and schedule a call directly with us or shoot us an email or text, whatever works better for you. If you got a lot out of this video, please like it, share it with a friend, and we look forward to seeing you on the next video.
Thanks, everybody.